Welcome everybody to small business tax, specifically Canadian small business tax. And I'm so glad to have Howard Wirch here. And Howard, tell us about yourself and take it away. We got half an hour to dive into this.
Sounds great. Thanks, Richard. I'm Howard Wirch. I'm one of the partners in Accent Chartered Professional Accountants based out of Dauphin. I've been doing tax for many years. It's just getting close to 30 years. So it's been a while. And yeah, background in accounting and tax. And yeah, just kind of excited to bring this presentation to everyone today. It's a starter session. It's not a real in-depth session, but certainly at the end, I would be welcome anyone that had questions or whatever. So, do you want me just to get right into it, Richard?
You can dive right in. Yeah.
Okay, good. Okay. All right. So we're going to start off with some small business tax. It's a fairly general topic. And again, we're going to talk some highlights, but what we're going to cover today um, will be some of the basic taxes that we encounter here in Manitoba. So the first one that's Manitoba specific is the PST. We also have GST, which is Manitoba and also other provinces. And then we're going to talk some income tax, some basics, and then we'll have opportunity for some questions. I have some common asked questions that we get at our office that I can also cover in that part of things. So yeah, we'll just get started here right away. So again, this is a very basic session. If I've covered things that you guys that everyone that is on the call knows already, that's on purpose. We're just making the assumption that these are new concepts for everyone. So we'll cover it at a base level, and then we'll get into more specifics. First thing is PST. So what is PST? Well, actually, it's a PST is what we've called it for many years. In Manitoba, it's actually called the Manitoba Retail Sales Tax, and it's administered by the Minister of Finance in Manitoba, and it's collected on most goods and most services that are available for consumers. So what I can tell everyone, and I'm sure you've seen it on any receipt that you pay, it's charged at 7%. So if you're a consumer, you'll see it on pretty much anything that you buy, but there are certain exceptions which I will get into shortly. But as a business person, especially if you're starting up a new business, you will have to decide whether or not you're required to collect PST or retail sales tax. That is the big decision. And the answer, as typical accountants always say, is it depends. So the first thing you have to do is we have to look at the type of business that it is. Is it a business that has applicable sales that attract the retail sales tax? And just because it's retail sales does not necessarily mean just retail businesses. It is also is applicable to service businesses. So, for example, accounting services. We do collect PST on most of our services. There is an exemption. Just as an example, we do have an exemption on one type of our services, and that was a recent change. It's got to be over 10 years now that retail sales tax has applied to professional fees. But if we prepare our personal tax return for our client, it does not have PST. So we have one segment of our services that does not attract it, and that is personal tax. So you only get charged the other tax, which we'll talk about later. So the reason I used us as an example is that it is possible that the PST could or could not apply to the business. It all depends on the type of business. So let's talk about a couple common exemptions. So certain items may be exempt. So this is a product, but certain industries are also mostly exempt. So one of the industries that doesn't really attract PST in the most part is farm products. So that's farm machinery and farm commodities. So if you're a grain farmer, for example, you don't have to collect retail sales tax. It's actually considered zero rated for those services, or exempt, in other words. Groceries, most groceries, the basic essential groceries are also exempt. There are certain products that will attract PST, and the list of those are lengthy, but if you're unsure, and I've got it up on screen, you can check out the Manitoba Finance website, and we can also send a link out to anyone. And there's bulletins for specific industries. So one of the things I'm recommending is, if you're not sure that it applies to you, is to do some research or have someone like a professional do research for you, so that you know whether or not your services or goods are subject to GST. And it might be a situation like ourselves where certain products are or services are exempt and certain services are PST applicable. So it's complicated, I get that. But generally speaking, I would say most businesses should report and collect or PST, pardon me, or retail sales tax. So you can see on screen, you can register for this if you need to. But before you register, I do want to talk about a couple registration things. First of all, if you're considered a small business, and maybe it's a home-based business, you may wonder, well, do I have to register for PST if I'm really small? And the answer is no. There is a threshold, a small supplier threshold, and we'll talk about this again in the next section. But the small supplier threshold for retail sales tax is $30,000 annually. So you can register or not register for it, but if you're under $30,000 annual of revenue, so it's voluntary up to 30,000. But once you've reached $30,000 in a calendar year, then you must register. So that's in gross revenue, and that's PST applicable revenue. That's the other thing. So that's just something to be aware of. So you can be a small home-based business and not have to register for PST if your revenue is under 30,000. The other thing is, now what do you do when you want to register? So I've got the website up on screen. It's called Taxess, TAXCESS. That's the link on the slide, and you can certainly record that. And that's the government website to register. It's also the government website in Manitoba to file and report your PST. So when you register, you can register on various basis for reporting. What I mean by that is, it could be monthly, it could be quarterly, it could be semi-annually, or it could be annually. Those are the options for registration. If you're a very small supplier, they're going to ask you, for example, what your estimated gross revenue is. And let's use the $30,000 example. Well, on $30,000, 7% of $30,000 is $2,100. It's simple math. And that would probably attract you to not reporting monthly. You could possibly look at quarterly on that, but it's a smaller amount of collected PST or retail sales tax. So most likely you'll be selected for semi-annual or annual reporting. The other thing that I wanted to highlight on the PST, and this is sort of the last thing, is so if you have an annual reporting or a monthly reporting, how do you pay and when do you have to file and pay? So the deadline, first of all, the filing deadline is the 20th of each month of the following month, pardon me, of your period. So for example, if you had an annual period, which is normally a calendar year, January to December, your deadline to file would be January the 20th of the following year. And you would report that and pay your PST that you collect. So you're required to keep books and records that would record the amount of PST that you collect. It is not considered a refundable tax, meaning that you only collect it and then remit it to the government. There are certain exceptions that we can talk about, and maybe we can cover that in the question and answers. And then you file it, and you can use this TaxS website to file it. So I'm going to move on. The next thing we're going to talk about is GST. So what is GST? Well, it's a federal consumption tax. It's administered by the CRA, or Canada Revenue Agency. Amounts are paid out to the Receiver General, who collects all those funds on behalf of the government. And in Manitoba, the rate is 5%. It's collected on most goods and services. And again, somewhat like the PST that we just covered, or retail sales tax, there are exempt items. So let's just talk about that for a minute. What's exempt and what's zero rated? There is a distinction in the GST Excise Sales Tax Act between these two types of things. They both mean that GST is not being collected. But on the left-hand side of the screen that I'm showing, the exempt products or items would be things like residential rent. So if you're renting a residence, you don't have to pay GST on that. The landlord does not have to collect it. Same thing with insurance, whether it's car insurance or life insurance or house insurance, fire insurance, those types of things. Those are also exempt from PST, or pardon me, GST. Under the exempt status, you cannot claim GST that you pay out against it. So I'm going to step back for a second and just explain how the GST works. Once you're registered for GST, you collect at 5% on all applicable goods and services. But you also, throughout your business cycle, might pay GST out on purchases or supplies related to your business that are included in your expenses. So the GST basically works as follows. You would report your revenue, you report your GST that you collect, and then you report the GST that you pay out on expenses, and we call those input tax credits. And you'll see that on the slide here on the top right, it says input tax credits. That refers to any GST that you pay. So in a GST filing, you report collected and paid. Normally, you collect more than you pay, and you essentially give the government the difference. So it's like the bullet point says, it's claimed against the GST that's collected. So it's a net tax type of situation. It's a little different than the retail sales tax in that we can claim items back. We also have another category of exemptions, or we call it zero rated. And one of the good examples of that is farm commodities or farm products. Farm machinery, most of it's zero rated, meaning if you purchase a combine, you do not have to pay GST on it, or if you sell a combine, that type of thing. And farm commodities like cattle or grain are zero rated, meaning you do not have to collect them, which means the GST is zero. But the difference between exempt and zero rated basically means that exempt, you can't get any GST back on things that you pay. Okay, so if you have a rental property and you charge rent to a resident, an individual, let's say, you cannot claim the GST back on all the expenses like utilities and repairs and so forth. But in a farm situation, it's zero rated, which means there's 0% GST on the items that you sell or collect money on. However, on the expenses, you can still claim the GST back. So a lot of farmers do get GST rebates because their revenue items or their sale items are zero rated. They don't collect any, but they have GST they paid out, for example, fuel expense or those types of things, and you get the GST back on those. So it ends up collected zero, input tax credits, X amount of dollars. The refund would be equal to the amount of GST that you paid out. So those are just some exemptions, but otherwise, normally you would claim back the input tax credits and you'd have a net tax payable. There are times in a reporting period where you could collect less than you pay out. For example, if you're in a retail business where you have inventory that comes in one quarter, large order, and then you sell it in the next quarter, well, the quarter that you paid all that GST on when you purchased those products may create a refund situation for you, and then later you have to pay it back when you sell it. One of the things that I wanted to mention about GST is registering. So again, just like the retail sales tax, there's a small supplier limit, meaning $30,000 on a calendar year or a year-over-year basis. So if you're a small business and your revenue is below 30,000, you don't have to worry. And you do have to register though once you go over 30,000. Oftentimes we get questions on this one. So do I have to then back pay all the GST for the stuff I didn't collect for the first $29,000 worth of revenue? And the answer is no. Once you're registered, the clock starts ticking. You have to then collect GST. You get an account number, a GST number, which is a 9-digit business number. And then from that period on, you have to collect the GST. You don't have to worry about before then, but you also can't claim anything back from the previous period. Your input tax credits or your credits against the GST that you collect would start after you register. So speaking of registration, we would have to register for a business number. That registration is done mostly online now. You can register through what we call My Business Account. Us as accountants or third-party representatives can help with those registrations through our Represent a Client service that CRA provides us with. But you can register for your business through those services. They're online services through the Canada Revenue Agencies. Filing, again, can be annual, quarterly, or monthly, depending on the volume. And we report revenue, GST collected, input tax credits, as I said, and then payment can be set up right through your My Business account with CRA or through your financial institution. And again, those are all things that relate to GST. We'll move on to income tax. Kind of the last major topic that I wanted to cover today. So income tax, who files what? First of all, just some basics. Again, it's administered by the Canada Revenue Agencies. And there's various business structures that can be filed. So if you're an individual and you have a business in what we call proprietorship, you file that small business income tax along with your personal income tax. It's a separate schedule, but it goes on your personal tax return for the given year. If you're in a partnership, that's also filed on your personal tax return in a given year on a small business statement. There's a couple different statements that we could talk about. One is a statement of business activities. There's also a statement of farming activities. There's actually two separate schedules on your tax return personally that you can look at there. And then there's statement of fishing is another one. It's farming and fishing. They have different schedules. So you can see those can all be reported on your personal tax return along with any other types of income. If you're incorporated or have a company, that is a separate issue. I won't be covering that in too much detail today, but the corporations have their own separate tax return. It's called a T2 corporate return. And it's a separate filing from your individual filing, and it's its own legal entity. So revenues and expenses and assets and liabilities have to be reported on a corporate return. So it's a much different filing than your personal filing. But I will move on. So how the income tax works. Very basic concept. You report your revenue, total revenue. It might be different sources of revenue. Generally on the income tax return, all your total revenues are summed up into one number and reported as a total. Unless they're different types of businesses, and then you would separate those onto different business schedules. You would deduct appropriate expenses, and there's a lot of them, and we'll cover them briefly today. And then the difference between the reported revenue and the deductible expenses equals your net income or taxable income. And that's reported on your tax return along with any other income, and then other tax credits and so forth can be claimed as well. So let's just talk about a few expenses that we can deduct. These are some of the common ones. Advertising, interest and bank charges, insurance, that's property insurance, liability insurance, vehicle insurance. One thing that's not deductible, just to remind everyone, if you didn't know, is that life insurance is ordinarily not deductible. Again, life insurance proceeds are non-taxable if they're ever received, so therefore we cannot deduct them as an expense. Office supplies or general supplies, rent, if you're renting your premises, meals and entertainment, that has a specific deduction on your tax return. You can, for those meals, business meals or entertainment that you incur in the nature of your business, because there's a personal nature to these types of expenses, they only allow half of the deduction. So for example, if you have $100 meal, you take someone out for a nice meal as a business dinner, and it costs you $100, only $50 of that expense is deductible for income tax. Repairs and maintenance on buildings, equipment, and so forth is also a deduction. Supplies, phone and internet costs, and travel costs. Those are just some of the general ones. One of the things I wanted to talk about is business use of home. If you are a home-based business and you don't rent an office somewhere else, you can deduct a portion of your home for a home office. Generally, how that works is you designate the space that's used for the business. It may be one of the rooms in the home that you use as a office to keep your paperwork and do your work at. It could be portions that you use your house for storage of different products. You would add up all those square footage of all those areas and then divide that by the total area of your home, and that percentage, whatever that works out to, is you can deduct use of your home. So for example, the utilities costs, the property taxes, the insurance, and even if you have a mortgage on the property, that mortgage interest is also part of the available deductions for business use of home. Hopefully that makes sense. So that's some of the very basics of income tax. and then we've covered PST and GST. Does anyone at this point questions? And shut them out, or you can maybe if you want to put it into the chat.
Yeah, if someone has something they want to drop in the chat, then we definitely answer that. One question I have just off the top of my head as I was thinking about things is how do business donations fit into like deductible expenses? Are they deducted at the same amount as like
They're
advertising?
deducted as a, so I'll give you two scenarios. Because let's say you wanted to make a donation to uh, the local hockey team. Good example. They may not be a charitable organization. Okay.
Right.
So there's a difference between registered charity donations, which I can get into part B of my answer. But if it's a donation to a local fundraiser or club that you want to support as a business, that is considered kind of underneath the advertising and promotional part of your expense, and it's deducted against income just like any other expense. The better deduction possibly could be to consider a charitable donation, but that's not reported on your statement of business activities. A charitable donation, if you're an individual, should be grouped with other donations, and that's a separate tax credit that's shown elsewhere on your tax return. But there is very substantial savings on charitable donations, especially if you get over $200. So
Hmm.
I don't know if that answers your question, but that's kind of how I would interpret that.
Tracy had another question here. Is garbage pickup included as a deductible, specifically for farms?
So that would be considered like a repair and maintenance type of item, I would say. I usually garbage disposal fits into repairs and maintenance category. There's some broad categories for income tax, so we try and slot it into one of the areas that CRA has, and I would say that's probably the place for it.
Would that be like 100% deductible, or would that be like kind of business use of home where it's like a portion?
It could be. It depends on the nature of the if it's general garbage pickup that you have to pay for, and it has both personal and business elements to it, then you would
Yeah.
proportion. Yeah. Then I would put it under business use of home. There is a repairs and maintenance portion to the business use of home that I skipped in my original description of what can be deducted. So yes, it's deductible. It could be partially or fully deductible. For example, if you were a contractor and you had to take your stuff to the dump, and the city of Dauphin does have dump charges, that is 100% business expense because clearly those building materials are being dumped for a reason because you're a contractor. So depends on the nature of the business.
Thank you.
Awesome. Well, I don't see any other questions right now, but Howard, if someone is watching this later online, YouTube or Facebook or something, and they have some questions and want to get a hold of you, what is the best way to reach out?
I would say probably by email. I do respond to my emails. It may not be the same day, but within a day or two, it's usually responded, and I can give that to you verbally. It's HWIRCH at accentcpa.ca. Or you can call the office at 204-638-3005 and we can have a discussion if somebody wants to talk in person. Those are probably the two easiest ways for me.
Awesome. Well, thank you so much, and thank you for sharing with us. It was very good. It was a good refresher for myself as well.